Inflation has been a major concern for investors and savers alike, and it's showing no signs of letting up in 2024. So how can you protect your wealth in such uncertain times? Billionaire investor Bill Ackman has some eye-opening insights into why inflation is likely here to stay and what steps you should take to secure your financial future. In this video, we'll dive deep into Ackman's predictions, explore the impact of high inflation, and reveal practical strategies to help you get rich despite these economic challenges. Let's get started. Understanding Ackman's inflation warning. Billionaire investor Bill Ackman has raised significant concerns about the persistence of high inflation, which he believes will continue to impact the economy in 2024 and beyond. According to Ackman, the structural forces behind inflation, such as disrupted supply chains, increased government spending, and shifting global dynamics, are unlikely to subside quickly. He argues that these factors will lead to persistently higher interest rates, which could diminish purchasing power and affect investment returns. Ackman advises that investors should be cautious and consider reallocating their portfolios to hedge against inflation. This includes investing in assets like real estate, commodities, and inflation-protected securities. His warning underscores the need for strategic planning to safeguard wealth in an inflationary environment. The impact of inflation on your wealth. Inflation erodes the purchasing power of your money, which means that as prices rise, each dollar you have buys less than it did before. This gradual decrease in purchasing power can significantly impact your wealth over time. For instance, if inflation rates exceed your investment returns, the real value of your savings diminishes, reducing your financial security. High inflation can lead to increased costs for everyday goods and services, squeezing household budgets. To mitigate these effects, it's crucial to invest in assets that typically outperform inflation, such as stocks, real estate, and inflation-protected securities. By diversifying your investments and seeking assets that grow with inflation, you can better preserve and potentially enhance your wealth in an inflationary environment. Why is inflation here to stay? Inflation seems set to persist due to several underlying factors. Ongoing supply chain disruptions, exacerbated by the COVID-19 pandemic, continue to limit the availability of goods and drive up prices. Additionally, massive government spending on stimulus measures and infrastructure projects injects more money into the economy, further contributing to inflationary pressures. The shift towards green energy, while essential for long-term sustainability, incurs significant costs that may be passed on to consumers. Rising wages and labor shortages also add to the inflationary environment, as businesses face higher costs and increase prices to compensate. Central banks' policies of maintaining low interest rates and expanding the money supply to boost economic growth can inadvertently fuel inflation. These factors combine to create a scenario where inflation is likely to remain elevated for the foreseeable future. Strategies to combat inflation. Despite the daunting outlook, there are effective strategies to protect and grow your wealth. Number 1. Invest in stocks. Investing in stocks is a powerful strategy to combat inflation because historically, equities tend to outpace inflation over the long term. Companies often adjust their prices to reflect rising costs, which can translate into higher revenues and profits. This potential for growth helps stocks maintain their value even during inflationary periods. For instance, sectors like technology and consumer staples are known for their ability to perform well despite economic fluctuations. Investing in a diversified portfolio of stocks can help protect and even grow your wealth, as these investments generally offer higher returns compared to cash or bonds. It's essential to choose high-quality, resilient companies and diversify across sectors to maximize protection against inflation. Number 2. Invest in hard assets. Investing in hard assets like real estate, gold, and commodities is a robust way to protect against inflation. Real estate, for example, often appreciates over time, and rental properties can provide a steady income that typically rises with inflation. This makes real estate an attractive investment as both a source of income and long-term value. Gold is another popular hard asset known for retaining its value during economic downturns. As a tangible asset, it often serves as a safe haven during periods of market volatility. Additionally, Investing in commodities such as oil, wheat, and metals can offer a hedge against inflation, since these goods tend to rise in price when inflation increases, reflecting their intrinsic value. Number 3. Consider Treasury inflation-protected securities. Tips. Treasury inflation-protected securities, TIPS, are a unique type of government bond specifically designed to shield investors from inflation. Unlike regular bonds, TIPS have their principal value adjusted according to changes in the Consumer Price Index, CPI, ensuring that your investment's purchasing power isn't eroded by inflation. As the CPI rises, the principal value of TIPS increases, and you receive interest payments based on the adjusted principal, which offers a reliable income stream that keeps pace with inflation. This feature makes TIPS a compelling option for conservative investors seeking stability in an inflationary environment. While the returns may not match those of stocks or real estate, TIPS offer a low-risk way to diversify your portfolio and maintain financial security during uncertain times. Number 4. Diversify your investments. Diversifying your investments is a key strategy for mitigating the risks posed by inflation. By spreading your assets across various investment vehicles like stocks, bonds, real estate, commodities, and international markets, you can protect your portfolio from the impact of inflation on any single asset class. Each investment type responds differently to economic changes. For example, stocks might outperform during certain inflationary periods, while real estate and commodities can serve as a hedge when prices rise. By diversifying, you balance potential losses in one area with gains in another, creating a more resilient portfolio. This approach not only protects against inflation, but also capitalizes on opportunities in different sectors, enhancing overall returns and ensuring long-term financial stability. Number 5. Focus on long-term trends. Focusing on long-term trends is a key strategy to combat inflation's impact on your investments. Rather than being swayed by short-term market fluctuations, consider investing in sectors with lasting growth potential, such as technology, healthcare, and renewable energy. These industries are likely to experience steady expansion in the coming years, offering opportunities for returns that outpace inflation. By aligning your investments with these enduring trends, you can ride out temporary market volatility and benefit from compounding returns over time. Patience and discipline are essential, as this approach minimizes the risks of speculation and market timing, ultimately building a resilient portfolio that thrives despite inflationary pressures. Number 6. Maintain liquidity. Maintaining liquidity is crucial in times of inflation. Liquid assets like cash, savings accounts, and money market funds provide easy access to funds without losing value. This flexibility allows you to respond quickly to financial opportunities or unexpected expenses. While cash typically loses purchasing power during inflation, having liquid assets ensures you're not forced to sell long-term investments prematurely. Keep an emergency fund with at least 3 to 6 months of living expenses to safeguard against volatility. Balancing liquidity with other investment strategies helps you remain adaptable, providing financial security and peace of mind in an unpredictable economic environment. By understanding inflation and implementing strategic investments, you can protect your wealth and ensure financial stability. Diversifying assets and focusing on long-term growth will help you navigate inflation's challenges and secure a prosperous future. Thanks for tuning in. If you found this video valuable, don't forget to like, share, and subscribe for more insightful tips. Share your thoughts on inflation and investment strategies in the comments below. Until next time, stay financially savvy and take care. Goodbye.